morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. Today we'll start by looking at how equity markets performed on Friday. US equities were very strong, led by certain sectors such as consumer discretionary, technology and real estate. These sectors have underperformed year to date, but you've started to see some contrarian investors seeing buy signals, with perhaps investor sentiment too depressed. We also saw strong returns from European equities, the same sectors as what we saw in the US doing well. And we also saw this morning overnight Asia doing well, with Chinese equities and Japanese equities up over 2%. And really just a reminder, just looking back at last week, how quickly things and sentiment can change within markets, and just really the importance of staying invested during volatile periods. In terms of economic data on Friday, what caught the headlines was the US central bank's preferred measure of inflation, known as PCE. That came in just below expectations on a month-on-month basis. Looking at the less volatile index, which strips out energy and food prices, that came in at as expected over the month and on a year-on-year basis, which, whilst food prices continue to push higher over the month, what the data suggests is perhaps we're getting closer, or that thesis that inflation has peaked is starting to gain a bit of momentum. In terms of the week ahead, the economic calendar is fairly busy. What we'll have is manufacturing survey data out from Europe, US and the UK. Really important to dig into the details. What we'll be looking out for is looking at how manufacturers' input prices and output prices are evolving, and whether they are starting to fall, which would build on that narrative that inflation has peaked and trending lower. We'll also be looking out for the overall level of demand. We can look at the exports components and also manufacturing new orders components. And finally, we'll be looking at the supply chains to see if we're still seeing improvements there. We'll get inflation data out from Europe across France, Germany, Italy and Spain. So we'll be looking to see if that's peaked. If it comes in higher than expected, then expect to see the ECB perhaps push harder in terms of raising interest rates in the coming months. The main event, though, this Friday will be all about the US labour market data. What we'll be looking for is whether the US economy continues to add a loss of jobs to the labour market, which would tighten the labour market, and would expect to see the unemployment rate fall from 3.6 to 3.5%. If we see that come in as expected or higher than expected, as well as the wage data, which we also get on Friday, if wages are coming in higher than expected, then expect the Federal Reserve, the US Central Bank, to push harder on raising interest rates, perhaps more aggressively and over a shorter time period as well. So that's everything that we'll be watching out for this week. So please stay tuned and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.